Age wrinkles the body, quitting wrinkles the soul. General Douglas MacArthur. My friends, nobody said this would be easy, but it is exciting and fun. 10 to 15 minutes a day, that is all we ask. We see the S&P 500 up some today, along with the Nasdaq 100, our gold trade going in the right direction, that is down, and 20-year bonds still trying to sort themselves out. Let's jump into these markets. What do we see forming now that we are 3 days into a 5-day candle? We have price sitting right there on our trend line. Now, what is that showing us? Well, it's showing us that price is having a hard time pushing above that all-important weekly trend line. We'll keep our eye on that. Price percent oscillator still negative. Derivative oscillator gaining downward momentum. That is on the weekly chart. Remember, we had a weekly vertical crossover this last Friday. Look at the 2-day chart. It is barely heading down. Derivative oscillator still negative. Price percent oscillator about flat, just barely heading down. We have a 2-day candle, of course, that is drawing, that is up. Well, when I say drawing, it is drawn. The prior 2-day candle, green spinning top indecision, tending up. This is a green open box candle. It has busted through the 2-day trend line. It is below the weekly. It has pierced it in its top range. So again, we're paying close attention to where things have gone. If you have hit, of course, your loss bands, then you would have already, or perhaps today, pulled your trade. Now, if you have not hit those loss bands, you're paying close attention to what is going on the 2-day chart. As we move to the half-day chart, of course, it crossed over going up back on the afternoon of Friday the 25th. We talked about this, that the 4-day chart was moving up, that some of you might want to wait until it stopped moving up and perhaps started moving down, even a crossover going down, if indeed it does that. Those are not our favorite moves. Why? Because the small chart, that is the half-day chart, is always the weakest chart for jumping in or out of any trade. So again, we'll keep an eye on things. If it does start to roll over, you can see at the end of the day, it actually pushed through the weekly trend line after it pierced the 2-day trend line on Monday morning. That, of course, was a warning sign also. Are you doing what we told you to do? If you jumped into this practice trade or were holding off, are you keeping a trade worksheet for the trades when you enter them so that you learn from them? I hope that you are. It is the most valuable thing you can do, and particularly when trades are difficult. Keeping your notes, showing what you're thinking, how you're paying attention to piercings of trend lines, of crossovers, and again, of your different time frames, all three, the half-day, the 2-day, and the weekly. Now, let's go from the S&P 500 to the Nasdaq 100, up 0.68% for the day. It's forming a green up candle after 3 weeks of strong down movement. Weekly vertical crossover heading down back on the 18th, the week ending the 18th of September. Down strong the following week, up this week. Price percent oscillator still negative, still heading down. Derivative oscillator gaining downward momentum. 2-day chart, it's just about flat. We see the derivative oscillator losing downward momentum. We have a green candle. It has burst through this latest candle through our weekly trend line. And was that a decent weekly trend line? It was. It was 3 candles connected, just about. I guess we could have drawn that. Oops. I'm moving the wrong one. We could have drawn it to the 3rd, but it still clearly would have pierced it. And let me make sure I've got my 2-day set properly. I screwed that up and moved it. And we could probably actually redraw our 2-day trend line a little better. There we have 3 candles, but again, clearly pierced there also. So again, we're watching, paying attention to that. What's going on the half-day chart? It crossed over actually on the morning of Friday, like we saw on the S&P 500. boomed up on Friday afternoon, up on Monday morning, blowing off some Monday afternoon, but up on that was Tuesday afternoon, sorry, and up on Wednesday, both in the morning and in the afternoon. Not up a whole lot, 0.68%, but still up. We can see that the derivative oscillator topped in the morning, price percent oscillator still heading up. So again, definite signs of weakness there in that down move. We'll continue to watch and monitor that, see where that leads us. I do have a special training for all of our subscribers today. If you're not a subscriber, you're not going to get it. And it's beware of confirmation bias. That is seeing things with rose-colored glasses on, how you keep from getting caught up in that, like hoping a trade that has ended is still going in the direction you want it to go. Is that what is happening to you now? If you're in an S&P or a Qs trade, what should you be doing? What should you be thinking? That training is just for you. Beware of confirmation bias. It is available to our subscribers. How do you become a subscriber? You go to chartingwealth.com, sign up for free. That list is never spammed, never shared. Now, that's where we are on stocks. We're now going to move from stocks to bonds. What do we see going on there? The big downer for the day is TLT down 0.96%. We have a red spinning top. That's a solid red spinning top. Indecision tending down. We can see that price percent oscillator edging over further down. Derivative oscillator still negative, losing downward momentum. 2-day chart, check it out. We have a red down candle. Does have a wick on top, about the size of the candle itself, but a long one on the bottom. We saw where the 2-day chart had crossed over going up. Looks like it's heading toward a downer again. Hasn't happened yet. That won't be able to happen until Monday. Why? Well, no, I'm sorry, until the close of the candles on Friday. Tomorrow is the first day of the latest 2-day candle. Then Friday will top it off. So we may have a crossover going down. What does that mean for us? That is a 2-day recross potentially. Why? Because that weekly candle is down. So that's important to put in your notes if you have TLT crossing back over going down. Now, what does that potentially mean to us? Well, if bonds are going down, then typically stocks move in the opposite direction. So might give us more fuel in the future for seeing up moves in stocks. Now we'll wait, watch, and see. We still have 2 more days this week, so we will pay close attention to that. So that is where we are on bonds as far as the 2-day candle goes. Let's briefly take a look at the half day. Down in the morning and then really pulled back up some in the afternoon. We see that price percent oscillator heading down, derivative oscillator gaining downward momentum, but didn't plumb the depths in the afternoon that it did originally in the morning. So that's where we are on bonds. Lastly, we go to gold. Gold is moving in the right direction, which is down. Remember, we had a weekly vertical crossover going down on gold back on the week ending September the 11th. It did sort of what we're seeing this week, that following week after the weekly vertical crossover, it bounded up. And then it hammered down last week and is moving down this week. Still not hit the low it hit last week. We can tell that by looking at the wick on the bottom. It is a red down candle. Price percent oscillator heading down, derivative oscillator heading down. Go to the 2-day chart. We have a green spinning top, means indecision. And again, it's an open box, so that is an up candle. We look at the derivative oscillator, it's gaining downward momentum. Price percent oscillator still heading down, but we have a pullback in that down movement over the last 2 days. And we look at that half-day chart, and that's where we see where that up movement stalled. Went up on Monday and on Tuesday, and then on Wednesday, it stalled and headed down. Price percent oscillator on that half-day chart still going up. Derivative oscillator gaining a little upward momentum. So gold is back to moving in the right direction. We'll see. And that direction, of course, is down. We are short gold right now. Why? Because of that weekly vertical crossover going down. We'll continue to watch these charts. Let the charts lead us. We are trend followers, and I hope that you are filling out your weekly market worksheets once a week at the close of the market on Friday, your daily market worksheets every day, and your trade worksheets when you're doing your practice trades. Very, very important. Those worksheets are available for free in your show notes. They're PDFs right there. If you don't have our book, it's available, Charting Your Way to Wealth. Follow the link in the show notes. And thank you for all of our new Patreon supporters. Of course, with that Patreon support, at that lowest level, you get everybody gets our 3-part series on options made simple, the Charting Wealth Way, plus our short chart training, our long chart training, our looking back training to help you go back in time and find trends. And of course, that once a month live call-in session, which actually comes up this next week. It is going to be available, I believe that is the 7th. That is this next Wednesday. And we will go ahead and start asking our Patreon supporters to please start emailing us your questions for your practice trades, the ETFs and stocks you're interested in practice trading that we can help you review. And of course, we can't wait to have you all with us. Emails will be going out to our Patreon members. I was correct. It is Wednesday, the 7th of October at 12:30. If you're not a Patreon member yet and want to join us, sign up. Follow the link. God bless. All the best from the whole team at Charting Wealth World Headquarters.